I mean, I can see where the argument comes from, right? It's a digital asset. It's based on computer code. The argument here, if I understand, I'm not really sure if there's one single argument for this, but one of the arguments is that this is a man-made fictitious product that anybody could just generate using algorithms in a computer. So why assign value to something that can be easily made in your living room?
Yeah, so this is something I struggled with a little bit in 2017, and that's because we were seeing dilution. So we were seeing other coins capture some of the market share, and we were seeing splits within Bitcoin itself. And so I was interested in the space, but I avoided investing in late 2017, which ended up, in hindsight, being a good decision because it had that kind of multi-year consolidation and high volatility. Now, over those couple of years, though, we've kind of answered that question. So Bitcoin's network effect is very strong, and that's what really separates it from just about any other coin. And so, anyone can technically copy. Bitcoin's open source. You can copy it. You can run it. It's kind of like how you could copy Wikipedia, and you could run it. The problem is getting traffic to whatever you're doing, and sort of a community. And so with Bitcoin, you have over 10,000 nodes around the world running it, and some estimates are far higher because not all of them are visible. And so that can't be replicated just by copying the code. It's really about all the software that's designed to work with that particular protocol, as well as the developer community and the company ecosystem around it. So hardware support for it, security solutions, exchanges that accept it. And so that one particular protocol has developed such a strong network effect relative to all the other coins. And that's why over the past decade, 5,000 coins haven't been able to really take a lot of market share from Bitcoin.
Bitcoin is a bubble. Okay, I can see where this is coming from. I mean, it technically was a bubble in 2017. Is it still in one now?
No, for the most part, no. And part of the answer to that question is zooming out. And so
Right.
it's like a bubble in the near term, especially if you're looking at the linear charts. You see this thing go from near zero, and then it skyrockets all the way up to 20,000, then collapses, and it looks like a bubble. And
Yeah.
that was actually, again, my concern back in late 2017 when I initially covered. I was like, this came really far, really fast. There's lots of euphoria. But if you zoom out and you look at the logarithmic chart, you can actually see that Bitcoin's following a very rhythmic pattern ever since inception. It tends to have these big blow off tops every 4 years, and then it corrects, and then it consolidates, and then it eventually shoots up to another high. And so actually, when you zoom out, that 2017 high didn't look any different than its high from 4 years before that or 4 years before that. But that's the one that really kind of captured media attention, and that's the latest one. So if you look at the linear chart, the other ones pretty much disappear. So I would advise people to look at the logarithmic chart in
Mhm.
terms of kind of developing their long-term, whatever technical trends they might be looking at.
Yeah, okay, that's a good point. The governments will ban Bitcoin is another point that you've made. This is something I hear all the time. Bitcoin has been used for illegal purposes throughout its history. But the counter argument to that I've heard is that, well, so has the fiat currency. So has gold. You could use a dollar for illegal activities as well, right? There's no particular reason why you have to ban Bitcoin.
Yeah, ironically, the dollar's better for illegal activities than Bitcoin because
Yeah.
Bitcoin's a public ledger. And the FBI and others have gotten increasingly sophisticated in tracking on-chain transactions. Combined with know your customer regulations, they know a lot of the entry points into Bitcoin. And, so they can't unravel some of the initial transactions, but a lot of the later transactions, they're able to follow that pretty closely. And so Bitcoin's actually one of the worst mediums you'd want to use for illegal activity these days. As far as regulation, I think there is increased risk of regulation around kind of custody solutions and things like that. But the probability of an outright ban in many kind of major markets at this point, I think, is pretty low. And ironically, the bigger it gets, so people are concerned that if it gets too big, that's when countries might outright ban it. But the problem is once you have the Stanley Druckenmillers of the world, once you have Fidelity, once you have BlackRock, as you get bigger and bigger billionaire investors and multi-trillion-dollar institutions that are invested in Bitcoin, that actually gets harder to ban because now both the retail investors and the large kind of mega cap like donor class is also invested in Bitcoin, and so that's
Yeah.
increasingly disruptive if they try to ban it when it's that big.
Yeah, the other argument, you didn't mention this explicitly, but the other argument I heard against Bitcoin is that the supply isn't actually technically fixed. Well, it is, but in the sense that you could create forks, you could create other coins. I think the argument is generally more for cryptocurrencies at large. You can, it's not it's not impossible to create new forms of digital currencies. And so this ability to create new currencies inherently makes the value very, very low because the supply is technically unlimited. Can you comment on this? As opposed to gold, for example, there's only finite amount of gold in the ground on Earth.
Yeah, so this gets back to the network effect thing. So if you were to fork Bitcoin, for example, you can't fork the whole tens of thousands of nodes. And so that's why actually, if you look at the number of nodes that those forks have, Bitcoin Cash or some of the other derivatives, they have a much smaller number of nodes than the core Bitcoin protocol. And that's because they were unsuccessful at forking the community, even though they can fork the open source software. And so it really comes down to any sort of threat that can fork the community and fork the nodes should be taken seriously. But so far, all those attempts haven't really been able to take market share.
Yeah.
And that's why, as a market cap percentage, those forks did not really retain their value relative to core Bitcoin.